Well, this is Richard C. Wilson at the Family Office Club. Today we're doing a member spotlight interview with Toby Potter from the Global Integrity Finance. Welcome, Toby.
Hey, Richard, how are you?
Good. How about yourself?
Doing real good, doing real good.
Great. And what type of investment firm do you run?
So Global Integrity Finance is a private equity firm that does financing for real estate investors nationwide.
Okay, great. And in terms of what makes you unique from other investment firms or other lending firms, what's kind of your specialty area of expertise and what's kind of the size of your firm?
You bet. So Global Integrity Finance basically ensures success and profitability from about 26 years of being in the industry, a little over 600 or 60 million loans funded over the past 2 years, and really fine-tuning the demand for real estate and the capital made available, and leveraging the success of the client, which ensures the success of the fund.
Okay, great. And what would you say is your value add process that is kind of your go-to way of either de-risking deals or finding the better of the deals? I know you have a lot of people coming towards you and you only allocate or lend to a small percentage of those, right?
Right. And that's why I think we go back, Richard, to the ensuring the success and profitability of the deal. We go through a very in-depth due diligence on the property, not so much the client. We look at the asset, and through our algorithms, through our research, 26 years in the industry, we really are able to determine whether that project will have profitability, and with profitability ensure success. With that then ensures the success of the money being allocated and the success of the client. And that due diligence is the key factor that lets us look at the area, the ability to sell, days on the market, scope of work being done on the rehab, are they overbuilding, underbuilding? All those due diligence really come into play through a checks and balance of that individual project to analyze and determine, is this going to be profitable and will it guarantee success?
Right. And to point out to people who are not familiar with hard money lending, you're essentially lending with real estate as the collateral so that you have a secured, basically loan. And that's why the deal is so important. When everyone else in the world says team is most important, it's way more important than the deal. In your case, you want to make sure the deal is excellent. And of course, you look at the team in that context. But without an excellent deal, it doesn't matter how good the team is, because at the end of the day, you sleep at night because of the secure real estate behind your investments, right?
That's correct. And here is really a great storyline right now, Richard, is the COVID-19 put a big damper on institutional funds, put a big damper on the economy, but yet real estate is still the strongest asset. And all the loans that we have provided funds for, released capital on, are still performing today, even under this unique situation and circumstance.
Right. I remember we spoke a couple of weeks ago, and I couldn't remember the total number of loans you've done. Maybe you can remind our listeners of that in a second here. But I do know that you had mentioned that you did have to work through one or two, but then you came out with a profit. And then there was one where there was like an $11,000 loss. But every other loan you broke even or made money on. Do you have those numbers at the tip of your fingers, kind of ballpark?
We've done a little over 612 loans since 2015. Of that, we had 5 total loans that we had to do workouts. Basically, go with the client, figure out what we can do, what we can't do. Of those 5, 3 of those we took back. Global took them back. We foreclosed on them, repossessed them. Excuse me. And then we sent our team out there, finished the work, put them on the market, and sold them for about a 25 to 30% profitability. One deal we actually took back. We did the rehab on it. By the time it was all said and done, we sold it. We had about $11,000 loss on a $600,000 loan.
Right. Well, 1 out of 600 plus is pretty good batting average, I guess. So it's about taking low risks and then trying to get, a moderate amount of income for that relatively low risk is essentially your whole game, I guess. Right?
Agreed. And I think that all stems from being in the industry since 1994, going through the 2008 debacle of real estate, the financial recession that we hit, and knowing how many people lost so much money. We were in that, coming out of that and getting into the hard money private equity lending. We wanted to make sure that we set up a platform and a foundation that protected all the money and all the assets. And we do that due diligence with our team. And we really scrutinize every deal to ensure that it can perform even under the worst circumstances.
Right, right. Okay. What would be the number one due diligence question that investors should be asking any hard money lending group that they might invest in? Maybe no one ever asks you this question, but what should they be asking you, you think, to kind of separate who's good and who's not, who's solid, in the hard money lending world?
I think that the default rate is your biggest question. When you look at, when we do a lot of business with a lot of our competitors here in the Dallas area, and we look at their default rates and we ask them, why is your default rate so high? Because we don't. I think that the difference is that we turn down more loans than most people do. We turn down probably 6 out of 10 loans we'll turn down because the property doesn't make sense. Not to do with the borrower. Borrower may have great scores, may have great experience. The property just isn't going to perform, and therefore you have that default. And I think that's where most people looking to deploy capital into our arena really needs to look at, why is your default rate so low versus everybody else's, and what do you do differently?
Sure. Great. Yeah, I think that's helpful for those listening, educational for them as they look into the space. What about finally here, my last question is about your biggest piece of advice, to anyone investing in real estate, anyone who's doing lending. What's something that you wish you knew a decade ago, you either had to learn the hard way or it's counterintuitive in some way?
Yeah, and I think I go back to everything that I do today, Richard, goes back to the 2008 crisis. And it really stems from, we didn't know a lot then that we know now. And by applying that today and looking at trends, looking at real estate roller coaster evaluations, we can project what may or may not happen. And the biggest piece of advice I look at is just because there's a lot of noise going on over here doesn't mean that's where the real value is. That noise may be a bomb going off, where over here where it's real quiet may be a silent opportunity that nobody has capitalized on yet. And that's what we look at here at Global, is where is the trend moving away from and moving towards, and then moving in there as fast and cautiously as we can to capitalize on that opportunity and to really deploy funds properly.
Sure. Okay. Great. Well, if anyone wants to trade notes on hard money lending or connect with Toby, we're happy to help make that connection through the Family Office Club here. And Toby, what's the best way to get in touch with you and your team?
So the easiest way to get in touch with me is here at the office at 214-548-5190, or you can shoot me an email at Toby, Toby, at globalintegrityfinance.com.
Great. Well, thanks for joining us here today, Toby. Appreciate it.
You bet, Richard. Enjoy.
Take care.
Thanks.
Bye.